Hi everyone, welcome back to the market update featuring by Rationale and Marketsall. We wrapped up an incredible week for the US equity markets. Major indices soared with S&P 500 marking its best performance in over a year and crossing 6,000 mark for the first time in history. And it doesn't stop there. Over the weekend, the bullish sentiment carried over to Bitcoin, all cryptos, and pushed its price around 89K with Trump optimism after the election. Now all eyes are on that big milestone, the 100K psychological level. And yeah, let's dive into what's driving this momentum and what it could mean for markets ahead. Yeah, let's get started. First of all, before getting into the main questions how long will Bitcoin extend, or will altcoins be able to catch Bitcoin? Before that, I would like to talk about this a Trump optimism in especially for cryptos. What does that mean? We keep hearing, but what does it actually mean, the Trump optimism? So the Trump administration basically is anticipated to be a major boost for crypto industry, as Trump is the first openly pro-crypto president, and joining a pro-crypto majority in Congress. For example, there's going to be 66 pro-crypto representatives in the House, and there's going to be 18 in the Senate. With these numbers, Congress will have more pro-crypto than anti-crypto members in January with the administration of Trump. And that will be open a way for a significant regulatory advancements, because before that it was much more slow. And as the market gets regulated, more funds are expected to inflow to that industry. That's the issue. The administration could also bring a friendlier regulatory approach by reshaping the SEC's. They are expected possibly ending this SEC chair Gary Gensler's regulation by enforcement stance. Additionally, the IPO market will be definitely impacted. The IPO markets may reopen for a late stage crypto companies like Kraken, Circle, offering a new growth path for the industry. Key legislation such as the Financial Innovation and Technology Act and Clarity for Payment Stable Coins Act of 2023. These kind of legislation side also might improve, which these already passed the House. They are expected to be legislative focus, and these acts would clarify the roles of SEC and CFTC, establishing comprehensive regulatory frameworks for digital assets, basically, and stable coins. Stable coins is also will be really important. Altogether, this administration is positioned to create a substantial tailwinds for digital assets industry in US. Now, I would like to after these are the main potential contributions of this administration, and now I would like to show you this chart here. You see in this slide, that's the total crypto market cap excluding Bitcoin over total crypto market cap chart. Okay, this chart indicates the divergence between Bitcoin and altcoin. So if you want to learn, if you want to see that if altcoin is going to catch Bitcoin, or in a different market environment, vice versa, I think it's a good way to track such thing. And yeah, as we see increase in this ratio, as we see an increase in this chart, that means the altcoin starting to get more shares from market and vice versa. However, as you see in this chart right now, it has been a steady steady downtrend. It has been a steady downtrend since early September, with no major support levels right now. And I think currently technically I don't see any potential reversal opportunity right now. But that's how I'm tracking, how I'm tracing a potential reversal on that side. Now let's bring back an old favorite from like Fed's easing period, the Net Liquidity Index. I think like when we started this video series, like that was one of the hot topic, and I had mentioned it before, but it has been quite a long time, long time no see. But Net Liquidity Index, I just want to bring it back. This index is calculated by subtracting the Fed's reverse repo amount and cash revenues from Fed's total balance sheet. So basically the idea is, as the reverse repo amount, which is called like RRP, and RRP represent the excess funds parked at the Fed. So for example, a bank has an excess amount, rather than just leaving it leaving it without any funding and without any yield, they're parking it at Fed in exchange for some yield. So that's the parked amount. So if you park something, if you take that amount out of the market and put in Fed's vault, that will mean that's a drainage of liquidity, right? So with that mentality, when those amounts like a cash amount and RRP amount increase, net liquidity index is effectively pulled out of the market, meaning less circulating money. So liquidity declines. So that's the mentality behind it. Let me repeat: if parked amount, which is reverse repo, and the cash amount of Fed, which is Fed's vault, if those amounts, like cash plus reverse repo, increase, we would see liquidity drainage, shortage of liquidity. That will mean a decline in net liquidity index. Now, take a look at this chart in this slide. Actually, I had tweeted about this. Here I attached that picture. The net liquidity, what you see here is the net liquidity index tracks alongside federal fund rate, which is the red step line chart here. What you see, you can see, and the blue line is S&P 500, and the above one is net liquidity index. What you see here is the net liquidity index tracks alongside federal fund rates and S&P 500. And I started examining this index again to see if there is more room for S&P 500 to climb. So usually S&P 500 and net liquidity index move in sync, they're synchronized, as you can see in this chart. But right now, when you come to the latest phase here, this side, the S&P 500 is peaking with a similar rise in liquidity. But so the big question is, with potential upcoming rate cuts, could we see a boost in liquidity that might push S&P even higher? That's the question. By the way, it doesn't mean if I say that S&P is going higher, it's pretty normal to see some retracement, some pullbacks in a a uptrend as a a profit taking activity. Just have you in mind. But that's the reason why, since this net liquidity index is always in line with S&P 500, and since I don't see any it has actually still have some room to go up. And with the upcoming rate cuts, so I was questioning, maybe it might support liquidity, and it might push S&P 500 higher. This is another perspective that I just wanted to bring. That's why I brought up this net liquidity index, to explore whether this could be the next catalyst for the market's upside. So before getting to the charts of this week, I would like to mention this week's economic calendar quickly, and then quickly I'll just flip around some charts to show maybe some trade ideas or the way I'm tracking the charts. So this week we're gonna get CPI numbers, The CPI is like, compared to like maybe 2 weeks before, it started to being like a bit more hot topic. So as you might remember, that the main focus was on growth side, and as we saw like a strong economic activity numbers from like NFP numbers and stuff. I mean, and the latest NFP number was bad, but there was some reasons behind it. But in general, like we didn't see any like concrete signs on like a recession or something. That's why like the idea of, okay, economic activity is doing good, but with Trump's administration, as we keep mentioning in these videos, that potential Trump victory would push yields higher because of their like inflationary potential inflationary pressures. If you look at the like 110-year break-even inflation rates, we see that inflation expectations are rising, although it's like still below 2024 Q1 levels. It's evident from like last week's market pricing that Trump's policies have increased upside inflation risk from the Fed's perspective. We'll see if we're going to see an evidence in this week CPI data. Other than that, we're going to receive PPI number. That would also give some hint about economic activity, and also like prices on like a producer side. And retail sales data would be important in order to see if the retail sales data will be in line with the NFP numbers. The latest NFP number, there was like retail data was so powerful. We need to track with like with sync both these data in order to see any like disagreement with both data. And yeah, this is the way that I will be tracing upcoming market data. So let me switch to charts quickly, and I'll flip through a few charts. First of all, I'd like to start with dollar index, as it is rising right now, and like this is monthly chart, by the way. And like I would like to prefer to analyze charts with like a clean chart and from the highest time frame to the low. But when I say low, generally the maximum I go is 4-hour charts. But that's my mentality. That's the way that fits to my trading psychology. Yeah. So here, what you see is monthly dollar index. As you can see here, is like there was a clear rectangle chart pattern, breakout, pulled back, and there was here you can see a consolidation. To check it more clear, let's go to the weekly one. And weekly, here you see there's a box. You can say there's a rectangle, or however you want to call. And yeah, and now we're here. So I'll be monitoring this level. If you're going to see a breakout, that will indicate that this pullback and the main movement on dollar index, maybe this like has started from like this like uptrend, that will be intact again. But that's the way. First of all, in the weekly chart, I'll be tracing this. I'll be monitoring this 106 levels. So gold, let me show you, like, first of all, in a monthly chart, as you can see, head and shoulder continuation. It's a perfect breakout. Then it moved back, and as you can see, the head and shoulder continuation price target was around 2,670 levels, and we are like currently seeing a rejection from there. And I still believe that, okay, like we definitely we'll see some like profit taking activity on gold, but I still don't see too much downside on gold. That's why for the ones like recently I've been like repeating this, like, but I still agree on that idea on like positioning as it comes down without any specific price level. And when you come to the weekly chart, as you can see, this black line is 10-week. It's below that right now. And as you can see in the daily chart, we lost the short-term moving average of 50-day and 21-day moving average. I'll be monitoring here if we can see some support from here, and it might act like this and form potential head and shoulder top. And in that scenario, if it comes down, I will be monitoring this red line, which is 200-day moving average. But for now, it's like since it lost the 50-day moving average and 21-day moving average, I can say that okay, the momentum is might be gone a bit, but still in the mid-term or long term, I will be seeking to be long. I would be seeking to be long in gold. S&P 500, I had mentioned this chart last week. This like a neckline was important, and after like Trump got elected, you see the movement here. That's how I follow. If you, I mean, yeah, that's not like a perfect copy handle, but I mean the movement is that way. Like at least, I mean that terms. If you wanna, at least if you wanna put some price target according to this technical chart pattern, you can say that 6300 might be a target. Nasdaq, same here. Let me show you this copy handle here as well. And like this breakout, struggling a bit here. If you see a retracement, it might be like a buying opportunity again, or you can buy here with a stop, depends on your style, but with a stop around like a maybe, if you want to play like a more wider, more like a long-term position, this might be a good one. If you want to play short, any, like if the price moves below this support level, old resistance, new support level, you can stop out yourself. And a little bit higher time frame, not higher, but yeah, if you go a bit zoom out, you can see that there's a really nice parallel channel working on a potential upside. I mean, where is it going to end? If you want to answer this question, this might be a good way to track. And like this upper band could be a nice target, apart from the cup and handle chart pattern price target that I mentioned here. Russell 2000, yeah, in a higher time frame. This is a monthly chart. Let me show you in the weekly one. As you can see, rectangle chart pattern is broken out, moved here, then pulled back, and here in the daily, you see that another cup handle, and the price target is there. I expect, like if we see the indices like going higher in general, at least I expect a little bit like an outperformance of Russell 2000 index futures, especially from the companies which their like system are aligned with Trump's plans in general, depending on which industry is that. But yeah, because I think the sector rotation that like the market was mentioning a lot, maybe I don't know, 1.5 months ago, is not done yet, and I expect to see some further rotation, and that would be, I mean, and we're gonna see the result on Russell 2000 index futures. Here, cocoa futures, and yeah, it's below 200-day moving average. A potential breakdown might be used as a short opportunity. That's why I brought this chart up. And yeah, something like this maybe with a stop. I mean, when it comes here, I'll be mentioning again, but just to put in your watch list. And Tesla, this was given also in Rationale Equities report. This head and shoulder, I mean, from this side continuation, and like amazing breakout. And of course, we're going to see some profit taking activity. And when you come to the daily chart, as you can see, we're so far away from moving averages. And I would like to see some convergence between the price and moving averages to see if, I mean, if I want to buy, yeah, I would like to see some divergence. Yeah, it was really difficult to like trade this breakout because of this gap, and here in this gap. Yeah, I mean, I also missed this one, but yeah, maybe potential like a retracement might be an opportunity. NVDA, here you can see the symmetrical triangle chart pattern was given in Rationale Equities report as well, but when you get rid of these lines here, you can see that here a cup with handle, a breakout, pulled back, and see a rejection from this level, as you can see. That's why I think this might be a good opportunity with a tight stop below here. As you can see, there's a small gap here. If you put stop here, then you will be stopped if this gap will be filled, and you might wait for another a breakout opportunity. But NVIDIA is a good call, I think. And cryptos quickly. Bitcoin weekly chart. Sorry, yeah, it was like this. Another handle. Breakout and ongoing. Ethereum, I had mentioned this symmetrical triangle chart pattern earlier for the ones following Marketsall videos. That was really nice symmetrical triangle chart pattern, and really like a huge breakout, and potential price target is 3,750 levels. Solana here, ascending triangle chart pattern, price target is, that's how I'm following this one. I mean, these are like, Solana was also another one that I had mentioned in previous videos. These are not like a trade ideas that I'm giving right now, but I just want to show how I'm tracking those charts. TRX, I think there, if you're looking for something, I mean, everything's gone, well, what am I gonna buy? I think TRX might be a good option. As you can see here, really nice couplet handle. A breakout seems stronger now. Today, while I'm recording this video, is 12th of November, and I would be expecting, I would expect this like a daily close at least, since today cryptos, like while I'm recording, it's struggling a bit after huge move. For sure, like naturally there's a profit taking activity, but I think TRX might be a good trade idea. And here UniUSDT, as you can see, head and shoulder bottom, breakout, pulled back, and these levels are challenged right now. And I think this might be also a good trade idea with a tight stop around here. A 4% tight, I mean 4% generally is not a tight stop, but for cryptos it's maybe lower than tight, I mean more than tight. Yeah, STX is another potential one that, I mean, here I'm like in the last three chart, I'm trying to reply for the one, I mean, everything's gone, what we're gonna buy, like these might be nice options. And STX, you can consider this as a fake breakout and take this STX chart to your focus list for a potential breakout opportunity, or you can trade it like, you can wait, I mean, like cup handle-ish style, and you can expect to form such handle here close to those here, as you can see, moving averages. If you can see some rejection from this short-term moving averages, that would lead to this handle, and you can do an early entry. And like, let's, I mean, if you see something like, let's say if it comes down like this, tuck, and this, you can, this area being long around here with a stop like this might be a good option as an early entry. VET V-chain is another option. As you can see, rectangle bottom chart pattern, breakout above 200-day moving average, and we see support level around here. You can also be long around here. And the last one is BRET USDT. This might be also another opportunity. So yeah, these are all I'm gonna talk about this week. Hope you find these videos helpful. If you find this videos helpful, or if you have any question, or if you have some, like, if, I mean, please also like, I mean, we would appreciate any kind of feedback about these videos that we can maybe change, or we can adjust according to your benefit. And yeah, that's all I would like to talk about this week. I hope you, whatever you see here, you find helpful, and I hope you have a great week. Have a good one. Bye.